Dollar rally threatens risk assets in this dollar-centric episode of Sunday Night Charts. We take a look at the charts to help you with the trading week ahead. I'm your host, Steven Van Metre, and thanks for joining me today on moving average colors on your screen. 21 days red, 50 days green, 100 days blue, 200 days tan. Price versus momentum. Price is a general direction. Price is ahead. Momentum is a rate of change. Bullish indicator for both is positive, and a bearish indicator for both is negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is a level sellers can't break, and support is a level. So resistance levels buyers can't break, and support is levels sellers can't break, or resistance is where sellers are at, support is where buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of trade, help with time and trade, and provide direction to the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. Let's start out with the S&P 500. Unchanged on price. Momentum still flagging bearish, but I can tell you what, my friends, that is soon to switch if this price rally continues higher. We see now a switch above the 90-day moving average, and what a difference, well, a Jackson Hole speech makes by Fed Chair Powell. If you missed my take on that, check out the Friday macro show where we talk about that. So what's going on with the S&P 500? You can see it's forming a supply zone right in here. We'll need to draw some lines in pretty soon, but you can see where this volume is spiking out, and that is where supply zone is at. So you see we have this on SPY between, looks like 415, 420, and now the supply zone is somewhere around 440, 441, which we said this in a previous episode, that there should be a supply zone up here. Now, what we're starting to see is early signs of a break above that supply zone. Will it get rejected? Hard to say. It's too early to call because certainly the trend is your friend and it's higher. But look at this. We've got the dollar here in green. Of course, dollar being the greenback, we want to color it in green. But look at these dollar rallies. When you see a spike in dollars, you see a move off in risk assets. So as we go through this, we'll look at the dollar, but keep in mind when we get to the dollar, as you know, if you've been a fan of the Sunday Night Chart Show, it's about to break out and go higher. Let's go on to the Qs, NASDAQ 100. We have unchanged on price and momentum. Again, the momentum, just like with the S&P 500, with SPY, about to start signaling a bullish take here pretty soon if the trend continues. And let's zip over to the QQQ, and what do we see? It too, see, we drew the supply zones in here, and I need to draw them in on SPY. But again, what you see as the dollar rallies up, you start to see a risk off mode. Not so much in the tech stocks, not as dollar sensitive as the SPY, but what do we see here? It's breaking out of that supply zone, which means this should go higher. I don't know where the next supply zone is. Could be tight, like you see down here, where it could be, say, a matter of 7 points. So we could be seeing where's the top of this at 368, so perhaps 375. Well, there it is. So this could be the beginning of the next supply zone. Could be that tight, could go a lot higher, but now you can see the volume dictates where the supply zones are at. Not as sensitive to the dollar, but let's take a look at the Russell 2000. We should see some sensitivity there, as the Russell 2000 is all U.S. small caps. Price flipping bullish on the 21-day and on the momentum for the 21-day moving average, now back above all key moving averages. Again, what effectively a day makes when you have the Fed chair come out and everyone gets bullish all of a sudden, and 1 month momentum is now turning green, 3 month momentum still negative and falling, 6 month momentum still negative and rising. Let's take a look at IWM, because this thing just rocketed higher, 2.82% on Friday. I mean, just crashing straight up through its moving averages. But I want you to see here, see how the dollar shoots higher, and that becomes a risk off mode. Dollar goes up, risk off mode. Dollar starts going up, risk off for small caps. So that is the risk you're starting to see. And the equity side is you start to see as the dollar goes higher, what do you want to expect to see? Well, small caps go lower. Let's zoom out before we get into this a little deeper. But you see this whole zone up here. You see this initial move down on the dollar, but after that, dollar rally is putting the small caps on notice that they're not going to go a whole lot higher unless the dollar cools off. Don't think it is from a monetary perspective. You understand QE and how that works. But anyways, what do we see? Small caps come off a supply zone, have shot straight into the bottom of the supply zone. So from the top of one to the bottom of the other, we know that they are there. The sellers are up here, buyers are down here. Buyers are very clear at the price zone. They're buying at 212, and sellers have been pretty clear above this volume profile line at 222. So ball is now in the hands of the sellers to defend here. And of course, we'll take a look probably on the Monday show, see how speculators are positioned. Speculators are deeply short the small caps. How about the transportation sector? Remember, this tends to lead the large caps lower. Price flipping bullish on 21-day moving average above now. The 9, 21, and 50-day moving averages are very key moves above the 21 and 50-day. 1 month momentum and 3 month flip down to negative and falling. Let's see if the transportation sector is giving us any indication of hope that all those who are bullish on the mega caps, the large caps, are going higher. Will we see it bounce above the volume profile line? So what do we get out of this picture? We're seeing where the bottom in IYT is definitely strength of buying. So the early take now is you should see IYT head higher, but do note how the dollar was I'll mouse over so you can see it, and you can overlay this on your own charts, but see how the dollar has risen, and that's put downward pressure on transportation. What should we expect going into next week? Probably a run up to its 100-day moving average. You can see where the volume is pretty strong there. That should be a decent test showing that there's strength in buying below that supply zone. At least that the red line is the highest point of trades or transactions in the past 6 months. So that is the center of that buy zone, expected to go higher into early next week. Let's go on to the energy sector. Unchanged price remains bearish. Momentum just slightly bullish on 21-day moving average. Now see it above the 9 and 21-day moving averages. That's a good start. You really want to see it get over the 50, but check this out: the 1, 3, 6 month momentum all negative and falling, not too good. But let's start with crude. Let's take a look. I don't think we looked at crude last week. Came down, bounced right off of 62 and shot higher. Now we know that there's going to be buyers of crude around 65. There you can see that volume profile line. The big concentration of the last 6 months is 65. So you should expect, at least for the time being, anything below 65 is likely to get bought. Shot up into this, looks close to around the 68.57 range, and still now it's got a shot to run up. This is a pretty strong trend. Would expect to see crude run up to probably 70 a barrel there. Let's take a look at the dollar, and yes, you do see moves higher in the dollar tend to signify risk off events in crude. Again, crude is traded in dollars, so you can see when the dollar shoots up here, downside move of crude, shoots up here, downside move, shoots up here, downside move, shoots up here. And look at that. You see right at the bottom where the crude bounced, the dollar went down. So again, dollar-centric episode. Keep an eye on the dollar. If it breaks higher, we got to go look at the energy sector. We didn't look at XLE, but you can see how sensitive crude is to the dollars. Now let's take a look at the energy sector. XLE shooting straight into this volume profile and tagged there. So again, this is the highest number of shares in the last 6 months, right there at 49.53. And what is that telling you? That's where the sellers are at. This is a sell zone that's been building up here. We haven't drawn any lines. We'll probably need to do that pretty soon. So I'll try to remember to do that. But again, same sensitivity here to the dollar would make sense. Dollar goes down, energy stocks go up. But right now you're seeing selling in XLE, suggesting that any upside move in crude is limited, because oftentimes you see stocks leading the commodity, or and when we talk about gold, you hear me say the miners lead the metal. How about financial stocks? Boy, they just have taken off. Price still bullish across the board. Momentum only bearish on the 50 and 100-day, just indicating what that means is the rate of change is not increasing, it's slowing. Now back above its 9-day moving average, and let's see what's going on with financials. And trying to break out, it's sitting at new all-time highs, but trying to break out of that supply zone. In fact, we probably need to move the line up here a little bit. But again, this is also sensitive to the dollar. You see the dollar rallying up, and that's a risk-off move for financials. So you see the dollar and financial stocks pretty much in sync there. Now, there was a move higher in the dollar here that didn't actually lead to soften financials, but the next move turned out to. So still fairly sensitive to the dollar. Keep an eye on that. But what is this volume profile line telling you? There is a lot of buyers here at 36.51, and it's probably because the banks are buying a lot of their stocks back, and well, they are. Let's go on to the industrial sector. Price now flipping bullish across the board. Momentum on the 21-day flipping bullish back above all the key moving averages again. Not a surprise. We should see this following the S&P 500. 3-month momentum flipped to negative and falling. Let's just take a quick peek at XLI. And where we see, yep, you could look at the volume profile line. What does that tell you? Buying, 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 buying. Where is the path higher? Yes, that is the direction for XLI should be higher. Let's go on into the utility sector. Bullish still across the board, only flipping bearish under the 9-day moving average, which isn't a big deal. Let's take a look at utilities. And I remember we looked at this. Let's see, how close did it get to those all-time highs? Let's zoom out. Did it break it? Well, it got up to where previous sellers were at back there in February of 2020. And guess what? It's finding them. So can this trend continue? Absolutely. There's nothing to say that this is anything more than a slowdown. Let's take a look and see what did it do. Cross the 21-day, trying to confirm the 21-day. So I'm going to say that it's probably likely to see some downward move early next week against the 21-day moving average as it goes higher. And that's what you want to see in a rally, across the moving average and reconfirmation. Looks like it's doing that. How about its sensitivity to the dollar? Well, not as much as the other ones, but remember, we talked about this in an interview with Michael Gadd, that this is a risk-off move, indicates that you see the utility sector rally toward the end of a major bull market. How about gold miners? As you know, still bearish on this, and then price and momentum are clearly flagging that. Flipped above its 9-day moving average, not a big deal. 12-month momentum is now negative and rising. Not the huge deal. That is usually the last thing you want to see in a rally. Let's take a look at GDX. Everyone's saying that, man, Steve, you're totally wrong on your call last week. It wasn't. First of all, this show does not make calls. This is not what this is about. Is if you look at the bigger picture of this structure, which is what I want to point out, this is a topping pattern, my friends. You do not see bottom patterns that look like this. So this, as a moment, is a topping pattern until it's invalidated, and it will not be invalidated until these moving averages smooth out and start to rise. Kind of like we saw here back in April of this year as it crossed over and went up, but they got rejected. So this is a topping pattern, and you have to be mindful that 31, right around 31, is that kind of neckline, that break point, break below there, and you're going to see the $28 price range. But everyone is super bullish on this over 1-day moves. You see that 1-day move early into last week. I think it was on Monday, and then got rejected almost all the way back down. And then, of course, on Friday, thanks to Jackson Hole and Fed Chair Powell, this thing just shot straight up. It doesn't change the big picture that there is a big bearish move going on in the mining stocks. And, we need to look at that in relation to the dollar. This is something that's real key here. As you can see, as the dollar, look at that, as the dollar goes up, mining stocks go down. So if you're bullish on the dollar, you're bearish on the mining stocks. And that's the case here, is that due to how QE works, I'm bearish on gold mining stocks. Anyways, on to high yield bonds. Price flipping bullish on the 50-day moving average now, and momentum on 21-day turning up back above all the key moving averages. 1-month momentum flipping negative and falling. 6-month momentum negative and rising. Otherwise, this looks like a pretty good picture. Let's see where we see with high yield bonds. There they are. And that volume profile line, that's 6. Look, I tell you, every time it comes down into that zone or a bit below, buyers. People are buying junk bonds. They love junk bonds. They're not worried about the yield. Which is amazing. At some point, I still think they will be sitting right up here near its 1-year highs. I think we're still well off. Still not getting close to its 2-year highs. A lot of buyers there. Maybe there's some big hands unloading their junk into the market, and happy to do it. And let's see, sensitive to the dollar. Not so much here, a little bit, but not quite as sensitive to the dollar as some of the other sectors. All right, let's move on to TLT. Of course, we know Bond King, very bullish on treasuries, loves TLT. Price bullish, momentum bullish above all the key moving averages. 9-month momentum is now negative and rising. 12-month momentum flipped back negative and falling. And this 9-month not too far from triggering green, and TLT looking like a big breakout coming. And here you can see it's forming this symmetrical triangle, and you can see here's the sellers, boom, 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 all the way on the top, coming down, buyers, boom, boom, there. Looks like a breakout somewhere right around this, we'll just say $150 price range. And you'll notice it goes up when dollar tends to go up. Why is that? Well, bonds are deferred dollars, so you tend to see them hook up and sync up. But I want to show you what you can see, and when we zoom in, here's the 90-day chart. See this volume profile line is right on that purple line, hard to see there. But that's how you knew this move here is getting bought, because everything below is where the buyers are at. Now, how do you know where the sellers are at? Go to the 30-day, and you can see them right up here. Now, that this just moved down on Friday, to show you that even over a 30-day period, there's just all this is buying under here and up here. You see this volume profile lines poke out. Look, selling, selling, selling. So there are your zones. The breakout is going to be at around 141. If TLT, if the buyers, which appear to be extremely strong, can break that, then you've got a big move out of TLT up to the 157. And let's zoom out on that dollar, and you can kind of tell I know you're saying, okay, the dollar rallied and sold off here. Man, it's deferred dollars. They're not going to line up perfectly, but the overall trend, when you see treasuries and the dollar rising together, that is a massive risk-off move in the markets. All right, let's go on to gold futures. Price bearish, still on 21 and 50. Momentum flipping positive on 21-day moving, now above all its key moving averages. My guess is if Fridays did that. 3-month, 9-month momentum negative and falling. 6-month momentum, which is a good one. You want to see the 6-month momentum positive and rising. So there's some potential good signs here, but you got to look at those mining charts, and you got to go like, oof, and you look at the dollar and you go like, eh. And what do we see? It came down to 1687. Boom, found buyers, and they were crazy and said, we love gold, we want gold, jamming it right through this volume profile line at 1783, and now tagging the upper end of what has been consistently a sell zone between 1820, and we see it peak up to 1830 and get rejected. Again, very sensitive to the dollar here and the big picture. If we zoom out a little bit, what you can see is, well, you don't see it quite as much. There you go. Yeah, as the dollar, well, the dollar actually went down and gold was selling off, but this is signifying there was a big bottom forming in the dollar. And if that dollar breaks higher, that is your risk off move for gold. Again, it's not that I don't like gold. I just think the dollar is going to go a lot higher. First, silver futures bearish across the board. 9 and 21-day moving average crossover into positive range. 1-month momentum negative and falling. 12-month momentum negative and rising. Let's see what's going on with silver, and we'll go ahead and we'll remove that dollar now. We don't really need to look at it, but just keep in mind everything's sensitive to the dollar as a world's reserve currency. Let's zoom out on silver. Ugly pictures, talking to the guys from Wall Street Silver. Interview came out on Saturday. So check that out, about how I'm bearish on silver and the metals in general due to the dollar. But here, you look at this, is a topping pattern, and all silver is doing here, came down and it found buyers around 2268, where it's previously found buyers before, and it's coming up into this, what was a buy zone. So here's how these zones switch. When up here, you got a buy zone and a sell zone. But when you start crossing through a zone, that zone tends to flip. And why does it flip? I want you to think about this, is because people that previously bought in here now realize that they're not getting what they want, and they turn into sellers. That's how a zone switches, is when former buyers turn into sellers. And that can drive prices down. Look at the volume profile. You can see $18 being where the real bottom of silver is next. Yikes. But I'll be bullish on that at some point, just not today. U.S. dollar, I am bullish on the dollar price. Momentum, all bullish across the board, remains below the 9-21-day moving average thanks to Friday. 12-month momentum flipped negative and falling. Otherwise, what's going on? Beautiful bottoming pattern in the dollar. Let's take a look at DXY here, and let's zoom out a 1-year chart, and then we'll check UUP. Look at this, just gorgeous bottoming pattern. Everyone says this is a bearish pattern, but I don't know how you can see a bearish pattern. It came and sold down and then it's bottoming. This is what it is. It's not a continuation pattern when you have rising moving averages and you have it poking up near 94, and every time it gets sold down, we'll zoom into this $93 range, it tends to find buyers, and it's finding buyers at higher and higher levels. So we'll be very curious to watch the dollar into early next week. There's a 50-day moving average, which it looks to be near to confirming and a move higher. Now let's check out UUP to pick up that volume profile. And we'll zoom out to the 1-year chart, and you can see this is where it was. This is around 94, around 25, 20, 25, 30. But now look what happened to volume profile. The volume profile line has moved up. And what is that telling you? Is there's an accumulation of dollars. We saw this in TLT. A lot of people said, no way, it's not how it works. And it is how it works. You're seeing accumulation in dollars. There's your breakout at 94 on the 2-year chart, 25, 22. And in the 1-year chart, you're seeing over the last year, the most shares of the dollar have traded at 24.91. And that is telling you very clearly there is accumulation going on. And as far as support in UUP or the dollar, you see here at 24.81. Again, bullish picture, my friends, until otherwise spoken. Anyways, thanks for watching. We'll see you back on Monday for the show about macro-related things. I'm your host, Steven Van Metre. Thanks for watching. Bye now. The content of this video is provided as educational, informational, and only not intended by investment or other advice. It is not to be construed as a recommendation or solicitation by a security, financial instrument, or to buy or sell any security, financial instrument, or to participate in particular trading strategies. So it was prepared by Steven Van Metre in personal capacity. Opinions expressed in this video that do not reflect the view of Atlas Financial Advice Inc. or Steven Van Metre Financial.